Hello and welcome to today's edition of Charting the Markets with me, Sean Mearson, Senior Market Analyst at IG South Africa. Today's economic calendar is quite heavy, following on from yesterday's Fed rates decision. We do have the Bank of England early this afternoon, followed by the ECB, and both banks there are expected to raise rates by 50 basis points. And obviously the commentary relating to future rate hikes and monetary policy will be closely monitored. So let's look at some charts now, and starting off with the S&P 500. When we talked about it last week, we were talking about this reversal and a nice little rally. We reached that first resistance level. We've broken out. We've now reached intraday. We have hit this 4,140 target on the S&P 500. We are still in overbought territory, but that uptrend is starting to emerge quite clearly now. We are seeing the 20, 50, and 200, the red, green, and blue lines, starting to see a bit of daylight between that, so reinforcing that we could be in the start of a new uptrend at this point in time. Close above 4,140 does start to target 4,220, possibly 4,325. Our preference there is to look for pullbacks from overbought territory for long entry. Ideally, back to about that 4,015 mark would be great. Pullback, ending with a bullish price reversal. But certainly, we're not looking at shorting tops at this point in time. We are looking at buying into pullbacks, and we're also watching to see if we do get a breakout of that 4,140 level. The DAX 40. Previously, we had talked about this short-term consolidation, viewed it as bullish. Small triangle formation, also referred to often as a pennant. We have had that upside breakout now manifesting, and we are now moving towards that target being about 15,740. And that is historical resistance. If we go back a little bit further on our chart, we can see it there. Again, also sitting in overbought territory. If you are long, you might want to keep a trailing stop loss on a close below a one-day low. Alternatively, if you're not long and you're looking to find long, you might want to wait for a bit of a pullback and hopefully get at a better level. Find long entry at a better level on that DAX 40 or the Germany 40. FTSE 100. Uptrend is confirmed, still in place. We're not in overbought territory. We have had a break of what we call a falling wedge formation, suggesting continuation to the upside. We'll say that that breakout has been a little bit less convincing. We've seen a bit more of a cumbersome move up, not really a strong momentum move up just yet, but trend is certainly up. Market is still up. Traders who are long might consider using a stop loss on a trailing below a 1 or 2 day low, and that's depending on your risk threshold. Moving over to Asia, the Hang Seng or Hong Kong index, whichever you want to call it, trends are confirmed as up. We've got that 20 above the 50, which is above that 200-day simple moving average. So it's what we call proper order on those moving averages, short, medium, and long-term trends. We've had a pullback from overbought territory. That pullback does look to have ended with this bullish engulfing candle pattern where my mouse pointer is just highlighting right now. We do see a bit of weakness today, but that pattern is still in play. With 22,815, the initial target. If we can close above that, then we start looking at that 24,500 level as the next resistance target. If traders who are long might consider having a stop loss, either on a close below this intra-period low here, at about 21,644, or maybe a slightly wider stop on a close below that 21,365 level. Moving over to some currencies now, starting off with the US dollar basket. So we've talked about this reversal of trend and what is now a new downtrend. We've got the 20 below the 50, which is below the 200-day simple moving average. So it's a proper order for a downtrend in terms of those moving averages. We've had a break of this support low at 101.15. And our next level on the downside is probably sitting there at about 99.15. So we are laboring in oversold territory, in and out, but that is just confirmation of that downtrend. Oversold signals are against the trend, so our preference is still trading with that trend, and that trend is a downtrend. Certainly at the moment, what we are seeing and what we're expecting is for the euro, for the ECB and the BO to be raising at a slightly faster pace now than what we have seen with the Fed. Some fundamental motivation for certainly the euro strength against the dollar, which is the chart we do have up now, where we've seen the price confirming that uptrend above those moving averages again. We have that proper order of those moving averages again. We have now broken resistance we had there at 1.0965. We've closed above that, retracing a little bit right now, but certainly that momentum is to the upside. Our next level of resistance there sitting about 1.1189. Cable, pound against the dollar, similar picture, a little bit less pronounced, but we do have that uptrend that is firmly in play. We have the price above those moving averages. We just had a bullish cross of that 20 above that 50 again. You could argue that maybe there's a bit more of a short-term consolidation, but certainly the bias does seem to be to the upside for cable, pound strength, dollar weakness. And we have been testing that resistance at 1.244. Now, if we can manage to break above that, close above that, we start looking towards 1.2996 as the next upside resistance target. Last on the currencies front, the dollar against the yen. Again, we have that downtrend in place, so more dollar weakness versus yen strength. Moving averages are giving us that proper order again, 20 below the 50, below the 200, red, green, and blue lines. And we have had just a reversal at resistance here. Downside target initially 127.11. And if we start getting below that, we could even start looking towards that 123.91 level below. And if you are short, might looking at having a stop loss on a close above this resistance high at about 130.42 odd on the dollar yen. Moving over to commodities now. We were using this 87.70 level as a resistance level to confirm maybe a directional trend reversal. The price has failed at that level and we have seen a reversal off there. So our view is that the longer term trend bias is still to the downside for Brent crude oil. Over the short to medium term, though, you could argue that there's a bit of a consolidation, but we are keeping that trend, trades in line with that trend bias, that longer term trend bias, which we think is down at this point in time. So traders might have considered short entry on that reversal off that resistance level. And if you are short, maybe looking at a trailing stop and a close above a one-day high. That's in search for the next level of support, sitting at about 77.60. Maybe even slightly higher if you want to be a bit more conservative, about 78.40, and it's dollars per barrel on Brent crude oil. Spot gold, trend reversal is in play. We've had the moving averages in proper order once again. We have price trading above those moving averages, lots of confirmations for that. Same sentiment there. We've been looking to buy into pullbacks. We've had a very shallow pullback here. That top was marked with this bearish engulfing pattern pullback. That pullback ended with what we call a bullish hammer formation, right off that support level, about $1905 per ounce. So we've had a rally. We've had our first pullback. It was a shallow pullback, which is considered quite bullish in the market. We've had strong follow through with a strong close above that previous high, about 1950. And our longer term target, which we've been talking about for some time now, is sitting at about 1980. Now, if you did manage to catch that, again, using a stop loss below a one-day low might be a consideration. Or if that candle is quite big and you're feeling, keeping a little bit tighter in what can be a volatile market if things do turn, about maybe just below 1935 could be a consideration. Somewhere between the halfway mark of this long green-bodied candle. Copper is also something we've been watching for quite some time. Copper is benefiting from a reopened Chinese economy at this point in time. Also lending, the People's Bank of China lending support to the property sector and trying to stem off any type of contagion into the finance sector. So economy is also obviously open after hard lockdowns last year, and that really is benefiting copper. China obviously being a key point of demand for copper. Copper also benefiting from climate change initiatives using sort of a greener energy, so to speak, things like your electric motor vehicles. So we've had that trend reversal. We had what was probably a bit of a triangle consolidation. We had a nice breakout to the upside of a strong rally through to resistance. We've traded through that resistance now, and we have seen our first pullback from what was overbought territory. If we just add a stochastic there, we can see that we have had, sorry, just want to change that value there. Anyway, we've had a pullback from overbought territory. That pullback has found support at what was previously resistance at 9030 mark. And at the moment now, we do have a red candle today and a red candle yesterday, but this is starting to look like a bit of a harami. where we have a suggestion that that low, we might have found a short-term low. If we do see a continuation here, and again, we are keeping a long bias to trades on copper or copper-related stocks, obviously miners of that, the likes of BHP, Glencore, Anglo American PLC, to name but a few. We're targeting a move back up towards about that 9,450 dollars per metric ton. If we can get through that, strong close above that, then we start looking at 9,970. There are also some comments that we could see copper move into a deficit this year, so it does seem to be some support, fundamental support for what we're seeing technically on the commodity right now. Right, that's all the charts from me today. I'm Sean Murison, Senior Market Analyst at IG South Africa. Do watch out for what could be a volatile day in terms of the Bank of England's interest rate decision, followed by the European Central Bank decision. And just a reminder, we're looking at 50 basis point rate hikes or 0.5% from both of those central banks today.